Hey folks, welcome back to another SPY options update. In the previous week, I mentioned that once we break out of this triangle, it's probably going to move in a pretty dramatic way. It looks like we broke out to the downside from the FOMC meeting on Wednesday. So let's take a look at my trades. On Monday, it was a pretty bad day of trading, so not a good way to start off the week, losing $105. But on Tuesday, I was able to make all of that back plus some. It's mainly thanks to this 440, 441 strangle over here, which I bought 4 of them at $78. And all the strangle is I am long the 440 put, so I make money if the stock goes below that, and I am long the 441 call. And in order to buy those options, I paid $78 per pair. But throughout the day on Tuesday, you can see the market moved quite a lot. At 11:51 or around 12, I sold all 4 of them, one here, and 2 here, at a higher price than what I paid for them. And then later on during the day, within an hour of the market's close, I put in these trades here, which didn't do as well, but the strangle was the main reason why I made a profit. And then FOMC meeting on Wednesday, I did a lot of trading. It turned out okay, made $80, but as you can see, I spent a lot of money on commissions, $27. It was just hard to gauge which direction the market was going to go. If we go to the 5 minutes chart on Wednesday, 2 p.m. was when the rate decision was announced, so big move down. Usually when there is an initial reaction, the market tends to go the other way for the rest of the day. However, as you can see here, in this case, it kind of peaked out right here, and because that did not form a new high, the trend is continuing to go lower, so that probably means the market is going to fall for the rest of the day, and that's what happened. Especially after the SPY broke down through this line, because that was the previous support over here, and once it did that and we see this red candle here, it's probably going to go down for the rest of the day. So I would definitely be bearish there, and I think that's what I did. This was around 3:05, so that was like the last hour of the day. This was around 3:10, so the last hour of the day, and those were these trades that I put in here around after 12 p.m. Pacific. And then on Thursday, I made $288. And then Friday was $100. And this one I'm speculating a little bit because I sold a 437 call that is expiring next Friday on the 29th. And I was able to make a nice premium from it. But if the stock market reverses trend, then I'm going to have to get out of this position probably for a loss. So next week, I don't expect to make as much money as this week because I'm not sure if I can capture 100% of the gains from this 437 call. But anyway, overall, for the week, I made $601 in premiums after trading fees. The SPY, on the other hand, went down about 3%. So overall, the chart looks like this. I'm up over 40% for the year, and it looks like the SPY is starting to roll over now after that little bump around week 35. So what does it mean for the upcoming week? Well, pretty much just reiterating what I mentioned last week. It's broken out of this symmetrical triangle and it's going down. I was kind of expecting a back test, like it would bounce off of this level over here because that was the previous support, and maybe go back and retest before either, shooting through it or continue going down. However, because it broke through on Thursday and Friday, and it ended pretty low. This is a very bearish sentiment, and the previous support before this one over here was this one over here, and it looks like on Friday we broke through that as well. So we have to go all the way back to like several months earlier before we see the last time the stock market was here. Normal stock market movements, we would see something more like this, where it's going down slowly. But what happened over the last few days was just very abrupt selling, and usually when that happens, as we see here, when you have abrupt selling, we do get a bounce back. And also over here, abrupt selling with a lot of gaps. Usually those gaps will get filled. So anytime you see like long red bars like this with gaps in between, the market usually bounces back. Doesn't matter if it's going down overall or up, like this one's going down, but we see these major red bars here. There was a bounce back even though it continued going down there. So even though I am bearish right now because this does look like it's going to continue falling, I wouldn't be surprised if there was a bounce back coming up soon in the next week or so. Now, if the strength of that upward movement goes past this yellow line here, then I would go back to being bullish. But for now, as long as the bounce remains below this line, then I would continue to remain medium-term bearish in the stock market. But for next week, I'm definitely looking at lower price targets just because it broke through the previous support. So the next support area is going to be down here around 426. So ultimately, I think that's where the market wants to go, but it'll probably come back and fill this gap at some point. It's just hard to say when that's going to happen. Anyway, that's it for this week. Thanks a lot for watching. Good luck with your investments, and I'll talk to you in the next one.